Climate change is an unavoidable question for investors, companies, and indeed society. It isn't a choice or an optional theme. One way or the other, it's going to affect us all, including those of us who manage money. Scientists and politicians have settled on 2 degrees as a safe rise in temperatures, and political leaders committed to achieving that in Paris 3 years ago. That means cutting global greenhouse gas emissions by 80% per person over the next 30 years, and reaching zero emissions within a decade or 2 after that. Today, the average person in the world creates carbon emissions similar to the average French person. That needs to drop to the average level of a Pakistani person within a generation. Achieving change on that scale means massive changes. The global economy has been built on energy over the last century, 80% of which is from fossil fuels. We will need to see up to $2 trillion a year invested in clean technologies and far higher penalties for emitting carbon dioxide. And if we don't make those changes, if we don't see that transition, we'll face catastrophic climate change where the risks are far bigger in the long run. Our economists have estimated global GDP could be cut in half by the end of the century without tougher climate action. To us, it's vital that we understand how changes like these will affect the investments we manage for our clients. These are complicated questions. There are no shortcuts to detailed analysis of the changes ahead and the implications for individual industries and what they mean for the companies we invest in. We've put a lot of energy into the topic. There are really 2 questions as we see it. First, how quickly does climate change move from being a future issue to a current risk? When do the effects we've described start to take hold? And second, how will the companies we invest in be affected by climate change in the future? On the first point, we developed the Climate Progress Dashboard to track global progress towards addressing climate change. It looks across a wide range of drivers: political action, clean energy use, carbon prices, electric car sales, and so on, to estimate what the current rate of change tells us about long-run temperature rises. The question's much bigger than any one area in isolation, and the dashboard gives us an overall view of how quickly all of those things are changing and what they tell us about future temperature increases. We publish the dashboard on our website and update the analysis every quarter. Today, it points to a long-run temperature rise of just under 4 degrees. That tells us there's an awful lot more change and disruption ahead to meet the climate targets leaders agreed in Paris 3 years ago. It's equally important to understand what meeting those targets would mean for the investments we manage. Again, there are no simple answers, and in all honesty, we think most of the investment industry has not thought about this nearly enough. We ask, what will change, and what do those changes mean for the value of companies? Carbon prices will be much higher. We built a model looking at the impact on companies' cost structures, the prices of different products, and how demand for those products will be affected in the future. There'll be a huge reallocation of capital from dirty to clean activities. We model how companies' valuations will be affected by different growth rates. There'll be a sharp reduction in fossil fuel use, and we look at the impact on oil, gas and coal companies of reduced production in the future. And there'll be unavoidable physical damage, which we model by looking at the impact on companies' assets over the next few decades of rising physical costs from climate change. By putting all of that analysis together, we can form a view on the risks facing every company. We can use that analysis to help our analysts and fund managers identify and measure climate risk and to help find future winners and losers. We measure the risks portfolios face, and we've worked with clients to help them measure the risks facing funds that they own. For us at Schroders, climate change will be a key investment theme of the years and decades ahead. It's unavoidable, not an option. We are preparing here as well as we can to help manage the risks and find the opportunities that will create for our clients in the future.